Good barometer. Let's just say $95,000 is your total tax bill at the end of the year, because this year was 91. So to be conservative, let's say 95,000. So now all you're going to do is look at your, obviously you're going to take the 95, divide that by 12, and on a monthly basis, both of you should roughly have $8,000 taken out in federal taxes. If not, you're going to have the shortfall. So that's kind of a barometer that you can kind of use, and then adjust your withholdings accordingly. So you want to probably maybe do not married filing separately from a tax standpoint. That way they take more taxes out. Whereas with married filing jointly, they're not taking enough out. And then along with that, if they are capping it out at 20% and you're in the 22% bracket, it may be a scenario where, like you just said, every paycheck for both of you, it's an extra $500 that comes out on the W-4. And the way that looks, let me just pull up the W-4. Yeah, come on. So the W-4, it's gonna look like this. Come on. Right here. So extra withholdings in section 4, that's where both of you would say, okay, let's say 500 just for argument's sake.
Yeah.
So and I'm not sure how each one of your employers is gonna have you do the data entry on the W-4, but this is kind of where that magic happens of making sure you have enough taxes taken out on the federal side.